Hi, do you qualify for MTD exemptions and deferrals? If not, you may face HMRC compliance penalties. We will explain everything in this regard.
Picture this. It's April 2026, and the way you report your income to HMRC has just changed forever. For over 1 million sole traders and landlords across the UK, this is about to become a reality. The old annual tax return, well, it's on its way out. And in its place, a new digital quarterly system. Now, this isn't just some small administrative tweak, it's a fundamental shift in how you run your finances. The clock is ticking, so the really big question is, are you in? Or could you be one of the few who are actually exempt?
Right. Before we jump in, I want to be crystal clear about where this information comes from. This entire guide was put together for you by the expert tax advisors at My Tax Accountant. Honestly, they live and breathe this stuff, so you can be absolutely confident that what you're about to hear is accurate, up-to-date, and designed to give you clarity, not more confusion. So, here's what we've got on the cards. We'll start with the MTD shift itself. Then, we'll get straight to the point, are you in or out? We'll look at the income thresholds. The heart of our discussion will be about exemptions, who qualifies and why. Then we'll cover how to actually apply, get our heads around the new penalty system, and finish up with some really clear next steps for you.
Okay, first things first. Let's talk about this MTD shift. Making tax digital, or MTD, is genuinely the biggest change to self-assessment since it started way back in 1997. This isn't just about using a new bit of software. It's a complete change in mindset. The days of having a mad panic once a year to sort out your tax return are numbered. This new system demands a much more regular, real-time approach to your records.
So, what does it actually mean for you day to day? Well, MTD for income tax boils down to two key things. First, you've got to keep all your business records digitally, using software that's approved by HMRC. That shoebox full of crumpled receipts you've got stashed away? Yeah, its time is officially up. And second, instead of one big annual tax return, you'll be sending 4 quarterly updates of your income and expenses to HMRC, plus a final summary at the end of the year. So that's 5 check-ins with HMRC a year, not just one.
Right. This brings us to the most important question for probably everyone listening. Are you in or are you out? And this is not something you want to guess at. Let's break down the income thresholds and see exactly who is legally on the hook to join this new system and when.
Okay, let's make this really simple. Who actually needs to get ready for this? This is a point that catches a lot of people out because your start date isn't based on what you're earning in 2026. Oh no, it's based on income you've already made. Let's have a look at the timeline. So, the key thing to get your head around here is how this rollout works. The first wave kicks off on the 6th of April 2026. This is for anyone with a qualifying income over £50,000. But, and here's the bit everyone misses, HMRC decides this based on your turnover from the 2024 to 2025 tax year. That's a full 2 years earlier. Then, from April 2027, the threshold drops to £30,000, and from April 2028, it drops again to £20,000. And each time, they're looking at your figures from 2 years prior.
So what on earth is qualifying income? This is another absolutely vital detail. We're talking about your total gross income here. That's your turnover, not your profit. It's the total amount of money you've invoiced your clients or received in rent before you take off any of your expenses. Let's think about Sarah, a freelance graphic designer in London. She bills £45,000 for her work. She also rents out a flat in Manchester for £10,000 a year. Her qualifying income is £55,000. It doesn't matter that her profit after costs is only £25,000. She is in that first MTD wave because her total turnover is over the threshold. This point is so important.
And now for the main event, finding a way out. Because even if your income is well over that £50,000 threshold, you might not have to join MTD after all. There are specific, legally defined exemptions. You'll definitely want to hear this part because it could save you a whole lot of hassle. There are basically 2 main routes to getting an exemption. First, you've got automatic exemptions. These are for specific setups like trusts, estates, or people who don't have a national insurance number. If that's you, HMRC should sort this out for you automatically. You shouldn't have to do a thing. But the second and much more common route is digital exclusion. Now, this is the one that requires you to actively apply and prove your case to HMRC. This is where it gets a bit more personal. So let's break down these reasons for digital exclusion, starting with age.
Now, to be perfectly clear, this isn't just about being over a certain age, like 65 or 70. It's about whether age-related factors make it genuinely impractical for you to go digital. Imagine an elderly shopkeeper who's run his business for decades using paper ledgers. If he's never used a computer and finds the whole idea completely overwhelming, well, that's the sort of situation HMRC is thinking about here.
The second reason is disability. This applies where a physical or a mental health condition creates a real barrier to you using digital tools. So this could be a visual impairment that makes reading a screen really difficult, a condition like arthritis that makes using a keyboard painful, or a cognitive condition that makes processing all that digital information a real challenge. The focus is always on how the condition truly limits your ability to do it.
Third up, we've got location. If you live or work somewhere that you just cannot get a reliable internet signal, you may well be exempt. And we're talking about more than just slow broadband here. This is for someone like, say, a farmer in a remote part of a national park with no broadband options and a mobile signal that's patchy at best. If getting to a library with Wi-Fi is a long and totally impractical journey, they could have a very strong case for exemption.
And the fourth main reason is religious beliefs. This is for practicing members of a religious society whose beliefs are fundamentally incompatible with using electronic devices. This has to be a core part of your faith and be consistent with the rest of your lifestyle. For example, you couldn't really claim this if you're using a smartphone and social media in other areas of your life.
Now here is my tip, and it is an absolutely crucial one. HMRC is extremely clear on this. They will not accept, "I just prefer doing things on paper," or "I find computers a bit tricky" as a valid reason. It won't work. The test is strictly about your ability to go digital, not your personal preference. It has to be genuinely impractical for you, not just an inconvenience you'd rather avoid.
So you've listened to all of those reasons and you think, you know what? I think I qualify for a digital exclusion exemption. So what happens next? Let's get practical and walk through exactly how you go about applying. This is your step-by-step guide. The process itself is thankfully pretty straightforward. First step, gather all your personal info and any supporting evidence you have. Then you need to contact HMRC. You can do this either by giving them a call or by writing a letter. In that call or letter, you must clearly explain your circumstances and which exemption category you think you fall into. After that, it's a case of waiting for their decision, which they usually send out in a letter within about 28 days. And to make that process as smooth as it can be, here's what you'll want to have ready: your full name, address, and national insurance number. That's a given. Be ready to explain how you currently file your tax returns. And most importantly, have a really clear, simple explanation for why you qualify. If you have any supporting evidence, like a letter from your GP or maybe a broadband speed test showing you've got no service, that will make your case much, much stronger. And of course, if you have an accountant, keep their details handy.
Okay, stay with me. This next point affects pretty much every small business, whether you're exempt or not. Let's talk penalties. A lot of people are really worried about getting fined for making small mistakes in this new system. The good news is HMRC has brought in a brand new and much fairer penalty system, and it includes a very helpful soft landing period to ease everyone in gently. And here it is. For the entire first year of MTD, that's the 2026 to 2027 tax year, you will get 0 penalty points for filing your quarterly updates late. That's the soft landing. It's a grace period. It's basically HMRC acknowledging that this is a huge change and giving everyone time to get used to the new rhythm without the fear of immediate fines. Just a quick word of warning though, this does not apply to your final end-of-year declaration or paying your actual tax bill. Those deadlines are still very much firm.
So how does it work after that first year? Well, it's a points-based system, a bit like a driving license. Every time you miss a submission deadline, you get 1 penalty point. For those of us filing quarterly under MTD, you'll only receive a £200 fine once you've stacked up 4 points. Now, this is much fairer than the old system of an instant £100 fine for being just 1 day late. It gives you a bit of a buffer, so one honest mistake won't immediately cost you. It's really designed to target persistent late filers, not those who just make the occasional error.
Right, we have covered a lot of ground, from who's in to who's out and what happens if you're late. So what should you actually do now? Let's pull all of this together into a clear, actionable plan. These are your next steps.
Okay, here is your action plan. First, dig out your records for the 2024 to 2025 tax year. Add up your total turnover from your self-employment and any property you rent out. Does it go over that £50,000 threshold? That will confirm your start date. Second, have an honest think about your situation. Do you genuinely meet the criteria for one of the exemptions we just talked about? Third, if the answer to that is yes,
Apply to HMRC sooner rather than later. Don't leave it until the last minute. And finally, if you're not exempt, start preparing now. Research some MTD software. Start getting your digital records in order. And most importantly, if you are unsure about any of this, please get professional advice.
And finally, just a very quick but important note. The information we've gone through today is for general guidance. Your business and your personal circumstances are completely unique, so you really shouldn't rely on this alone to make financial decisions. It is always best to seek professional advice that's tailored specifically to you.
And if you want that expert, personalized guidance, the team at My Tax Accountant is ready to help you. Whether you need to apply for an exemption, choose the right software, or you just want some peace of mind, give them a call on 020-2857-8531, or you can email them at info@mytaxaccountant.co.uk. If you found this useful, please do subscribe to the My Tax Accountant channel for more practical guides just like this one. So I'll leave you with one last thought. MTD is coming. Is your business truly ready? Thanks for your time.